You made the decision to buy a home, and you want all those things you hear about, like independence, freedom, stability, and to experience the long-term wealth-building effects of owning real estate. But you also don't want to make a mistake and take on this massive financial burden that could prove disastrous for your future. So if you're thinking through putting a housing budget together, you're in the right place. In this video, I'm going to give you a systematic breakdown and way of thinking through the entire process to uncovering the ideal budget for you. Before we begin, know that many people come to me as a lender and they ask the question, I want to see how much I qualify for, while some others might say, what payment is ideal for me given my current situation? And later in this video, I'll explain to you why asking the lender that question is probably the wrong approach. You'll see a stark difference between what a lender says you can do and what your reality truly might be. The key should be focusing on you. Your life, your spending, your goals, your future, right? Do you see the theme here? It is all about you, not my rule book, and certainly not some magical percentage of your income. So go grab your notepad and let's dive in. The first step to figuring out a solid budget is to analyze where you are today. How much money hits your bank account each month for you to spend or save? And then from there, we're gonna dig into your spending habits to see how much is left over for you to use for your new home. The tools you're gonna need for this exercise are your most recent pay stub, and maybe the last 2 to 3 months bank or credit card statement so we can measure your spending. When we talk about income, it's important to talk about the income after taxes and health insurance are paid. I usually like breaking everything down to a monthly analysis. If you're paid once a month, it's pretty easy. You just look at your post-tax paycheck, and that's the amount you're gonna use as your post-tax income. However, most people receive paychecks either every 2 weeks, which is 26 times a year, or twice per month. For those bi-weekly, you're gonna multiply that take-home check by 26 and divide by 12, just to get that monthly amount. Now add that take-home pay to your spreadsheet so we can get this started. For many of you, your pay stub will already include a deduction for your retirement savings. Be sure to highlight that. Now, in 2024, the 401k limit is $23,000 or almost $2,000 a month. This amount is something we're actually going to revisit in the future, depending on how this personal budget shakes out. But at a minimum, I do believe everyone should try contributing enough to at least max out their employer's contribution, which is usually somewhere between 3 and 5% of your income. Now that we know how much money hits your bank account after taxes, health insurance, and retirement savings, we can begin digging into exactly how you spend that money. I'm going to bucket these into different categories, with the first one being your survival expenses, like literally the things you can't live without. One that's probably easiest to spot on your statement is food. Just look up line items on your statement for grocery stores and see exactly how much you spend monthly. And go ahead and write that down. And then the next set would be your utilities, your recurring things that you have to pay every month, like your gas, your electric, your water bill, phone bill, internet. And of course, you have insurance, your annual deductibles, maybe your co-pays that a lot of people often forget. If your max out-of-pocket insurance costs are $2,000 a year, you might just divide that by 12 and include that in your monthly budget. You can do the same thing for your auto insurance, which is often an annual bill as well. And we can't forget about our loved ones, our kids, and our pets. You know, they both might require daycare, pet sitters, medical visits, food, toys, etc. Just be sure to catalog all those and write those down. We haven't even gotten to the discretionary items yet, and I'm curious how things are looking for you so far. You know, I have a lot of clients pause right here, and they're shocked at just how expensive regular life can be. But discretionary spending is real life. So before you buy your home and take on this new mortgage, you should see what life looks like if you don't change. Now, while I believe buying a home changes patterns and habits, this is just a great exercise and really a really good place to start. You know, your priorities of life become very clear during this exercise. What are your non-negotiables as it relates to enjoying life? And just real quick, if you've found value in this video, please hit like and subscribe to this channel so the YouTube algorithm delivers this video to other people just like you who are trying to become a homeowner but do it responsibly. The reason we get the past 2 to 3 months of your spending statements is so we can average out your spending patterns. For me, I know I go through periods of hibernation where I can't do anything. And then all of a sudden, it seems like 1 month I go bananas and I'm out all the time spending money. A 3-month average captures this behavior. Here are the things you're gonna wanna look for and begin adding together. The first is food away from home or restaurants. How much are you spending eating out every month? This can include meals where you might be alone or time spent going out with friends. And some choose to break those out separately. For instance, if it's a solo lunch during your workday, you might put that in the solo restaurant category, while the rest you'll classify as social, right? It's no secret that eating out is more expensive, especially if you're addicted to things like DoorDash or Grubhub. If at the end of this exercise you decide to cut back somewhere, it's nice to know which bucket you're cutting back, solo eating versus eating out with friends. Now, we can't forget about clothing. Well, I'm someone who seems to only buy clothes every 4 to 5 years. That's a true story. I'm sure you'll probably see this same shirt in some video I did 5 years ago. I know that's not most people. So add up what you spend over the past 3 months and kind of break that down into a monthly allowance. And what about entertainment? This can be everything from movies, bars, shows, concerts, you name it. Anything that you could say no to, but you didn't because you wanted to do it. Like, you really enjoyed it, so you were willing to spend that money. And same as before, you want to average that out over a few months to capture the ups and downs of, week over week. This next bucket can be frustrating to review, and that is your monthly recurring tech items. Some recurring items are annual, others are quarterly, and most are monthly. You want to look for things like memberships first. So Costco, Sam's, Amazon Prime, those are often annual, but you'll certainly see things like your gym that's probably monthly. You probably have some music apps such as Spotify, Pandora, Apple Radio, and I'm sure you have a few binge watching apps like Netflix, YouTube TV, or Hulu. And of course, we have those annual monthly fees for those random apps or services we use, or worse yet, all the ones that you signed up for that you don't use. You just forgot about them and you haven't canceled them yet. As a side note, please put a comment below and let us know exactly how much you've been paying on these apps and services that you haven't used in a long time. I know every time I do this for my own household budget, I always seem to find 50 or $100 a month. It drives me crazy. And of course, our favorite category, our guilty pleasures, like massages or nails, hair, beauty. But actually, let's be honest, most all of those should probably be considered survival expenses. The last thing we'll focus on here are the large annual expenses such as vacations or trips with friends, or maybe to go see family. Maybe you go on 2 trips per year that cost $3,000 each, or $6,000 in 1 year. In that case, you'll simply add $500 a month for your vacation budget. Now, there are a few other things that only show up a couple times a year, and that might be birthdays, holiday presents, and charitable contributions. You want to figure out how much you spend on those annually and kind of break that down into a monthly amount to add that to your list. Let's stop here for a second to recap. You started with your take-home pay, the money that hits your bank account, which you can spend each month. You then use 2 to 3 months of your spending account statements to see how much you're spending to survive, to save, and to enjoy life. And if you subtract all those survival and enjoyment expenses from your take-home pay, we get the remaining amount of money that you can either spend on your home or invest, or really just to up-level how much you spoil yourself. Now it's time to get more strategic about your future. Looking at your expenses, ask yourself, do you have any adjustments that are easy to make? Would you eat out less? Would you put a cap on some of your social spending? Would you Uber less? I will say, when people buy a home, I tend to see them enjoy their home more, which usually leads to a decrease in the amount of social spending, or at least restaurant usage. Your savings and investment habits are really good to think about. Are you saving enough for retirement? If not, should you make an adjustment there? Or does the fact that you're thinking of owning a home, does that monthly principal payment and possible long-term appreciation, is that good enough for where you are at this point of life? And are you putting enough money away into your life's what-if account? Right? Owning a home is going to come with a new responsibility, and that is fixing the things that break. Do you have an adequate cushion for these events, or should you have maybe a few $100s a month go into your savings budget for your what-if account? The more predictive we can get in your future, it'll just help prevent surprises. It'll give you more confidence in your budget choice, and often allows you to purchase a home that is more sustainable for your future. Now, when thinking about the future, we should consider expenses that are likely to occur. Will your car need to be replaced? If not, are the repair bills expected to go up because the one you have is so old? Another might be childcare. If you're thinking of having kids, have you priced out daycare costs? And how might that impact your budget? In my market, childcare is like $2,500 per kid per month. That is not insignificant. We could go the other way and think about the bills that'll disappear, like a car loan or a student loan or other installment loans. Maybe you have this payment that's $500 a month, but you only have 1 year of payments remaining. Buying a home is a long-term commitment. So thinking about these long-term debts, both what will come, but also what will disappear, is just prudent to discuss. Now, what about your income? For one, is your job stable enough with your current employer? And it probably is if you're trying to think about buying a house, but it's at least worth having that discussion. And are your pay raises expected in some type of guaranteed way? For instance, I'm in DC, and the US government workers, they have mostly predetermined income structures with grade and step adjustments. They can also expect annual cost of living increases, which sort of matches inflation. So with that predictability, should you count on that raise that you might be getting in 8 months and actually add that to your budget? If you have variable income, think of bonuses, overtime, commissions. Is what you're making today a reflection of the future, or are there risks ahead that could possibly change that? For instance, in the mortgage business, loan officers had record income in 2020 and 2021. In 2023, most of them made about 70% less personal income. If they budgeted life off those record years for houses, cars, whatever, they would have significant financial hardship and strain today. And I've seen this happen in other industries as well, such as software or pharmaceutical sales, the auto industry, and really just any commission-based job that exists. Speaking of income in the future, should you consider tax savings that comes with a mortgage as a budget line item? Be sure to check out my video on homeownership tax savings, as for some, the tax reduction is meaningful. It's complicated as it depends on your filing status, whether you're single or married, your total income, and the size of your loan. I discuss this in depth with every single one of my buyers when we have consultations, and I will say it's quite eye-opening for most. The last thing I'll say about predicting the future is to better understand the maintenance requirements of your new home. If you're buying a condo, you might not have much to worry about. However, a single-family home is a different story. For me, when I bought my house about 7.5 years ago, I was a bit shocked at the adjustment in my utility bills for gas and electric, and probably more shocked at the landscaping expense. Now, my home inspection gave me the full story of what kind of shape my house was in, and they weren't wrong. I've barely put any money into maintaining my house other than air filters and gutter cleanings. That said, I do see expenses coming as I have an aging deck and now a few rotting window casings around certain exterior windows. As you can see, proper life budgeting takes a lot of thought, a heavy dose of what-if thinking, and an agreement with yourself to control where you spend and how you invest your money. Now, some will make short-term sacrifices to own their home, while others will delay their purchase to continue stockpiling cash for investing or to just maintain their current lifestyle. And in the next video, I'm gonna go through a real-life example of how someone would work through this entire process. And you'll be shocked to see the comparison between real life and what a lender would actually allow someone to take. I look forward to seeing you in the next video.